Now, the Organization of Petroleum Exporting Countries says that it expects global oil demand to rise in 2023, but at a slower pace than this year. Now, in its first forecast for 2023, the producer group sees demand rising by about 2.7 million barrels per day to 102.99 million barrels for the year. It did leave this year's growth forecast unchanged at 3.36 million barrels per day. Now, the data comes as OPEC, Russia, and its allies are aiming to restore output to pre-pandemic levels by August. Now, the increased supplies have not been enough for a few consuming nations, including the U.S., which has repeatedly called on the producer group to supply more crude oil. Oil held on to an earlier decline after the report was released, trading below $103 a barrel and well off the near record high of $139 per barrel, which it hit in March. Well, let's get into all this with an expert on global financial markets and, of course, supply chains. We're joined by Mark Rossano. He is the founder and CEO at C6 Capital Holdings. Great to have you with us on the show, Mark. Now, of course, analysts have said that we're facing the worst supply crisis in decades, and OPEC's 2023 outlook suggests that there will be no relief anytime soon for consumers. Looking at the dynamics of oil supply and demand right now, how long will this crisis persist? Is it months? Is it years? What's your take?
Well, thanks for having me. It's a pleasure to be on, and I think it's an important question when you're looking at supply and demand, and really the backdrop. Because when you're talking about supply, we really have to look at where is the supply coming from, and everyone looks at OPEC and OPEC plus in general, but where are the shortfalls being driven? And it's really in the West African nations when you look at Angola, Nigeria, Congo. But it's really because their biggest buyers, which is China, has really been lost to Russia because Russia is trying to fight as hard as they can to get their crude into the market. So when you start looking at these shortfalls, there is some capacity that can come out of the Middle East nations, but now you have Libya that has been thrown into question with the backdrop on the politics in the NOC, and all of the while the demand continues to diminish, just at a much slower pace than what I think people were expecting. Though I do think that accelerates. So I think the problem really persists and I'm going to measure it by quarters to be difficult. But for me, I think this is something that's going to persist well into Q1 of 2023.
Well, the U.S. seems to believe that OPEC does have scope to raise production. In fact, President Joe Biden is currently in the Middle East, and he's urging Gulf producers there to ease the crisis by opening the taps pretty much. Is there a realistic expectation that OPEC producers, especially those in the Gulf, can raise production?
So they can raise production. The question is always going to be how much and for how long. So when you look at how they've invested over the last 5 years, there has been some expansion. When you look at Saudi Arabia, Kuwait, as we know, the UAE had a big fight during the OPEC plus meetings, saying that they wanted their cap to go up. So there is some expansion, but again, it's also a matter of, well, how much and for how long? And is there about 1 million barrels that can come out between these areas? Yes. But when you look at the bigger issues, it's really when you start looking at how much Russian flow is going to be lost and how is that going to shift with the new issues in terms of insurance, shipping ratios, and then realistically, Nigeria currently has two leaks. Are they going to get that under control? And where does really West Africa? Because when you look at who is missing production, it's not the Gulf states. It's really the West African and the North African region.
That's quite right. Well, let's talk about the overall impact it's having on the global economy. We know it's worsening a cost of living crisis and also threatening to tip the global economy into recession. Africa currently is facing significant fuel shortages. We're seeing fuel prices going up across the continent every day, and that's causing some political issues. So can you explain to us how this rise in oil prices and how the Russia-Ukraine conflict is all working together to exacerbate the situation?
Sure. So you have two pieces to that, and I'll take the Russia-Ukraine one first. So when you look at Russia and Ukraine, Russian flow is being shunned essentially from West Africa and from the U.S., which means that it has to find a home, and it has to find a home further away. So you're increasing miles per ton. So you do have the Middle East, which has gone from importing about 25,000 barrels a day of Russian diesel and fuel oil to importing 160,000 barrels a day and rising. But at the same time, Europe is out there competing in the market. So India, for an example, has actually had domestic shortfalls because they've been exporting everything they can into the Atlantic basin, which is just Northwest Europe and the United States. So you have the West essentially competing against against Africa, against other ASEAN and Central Asian nations, and absorbing a lot of this diesel, which is causing these shortfalls, besides the fact that we already had very low storage on the diesel middle distillate side. And to throw another wrinkle in it, it's the US dollar. When you look at the US dollar rising, and if you look at how diesel, gasoline, oil is priced, you're seeing these other pressure points because as global trade slows, to your point on that tipping point on a global recession, if you're not naturally taking in dollars, how are you going to finance this? How are you going to bring this through? And then you do have the subsidies that are being cut. Mozambique was the most recent that cut subsidies, which is also going to exacerbate the issues internally on a geopolitical front, especially within the African region.
Well, let's, before we leave here, we have to touch on how this is impacting oil prices going forward. Brent crude prices, they did fall below $100 a barrel this month, and that raised some hope for a moment that this period of high prices could be coming to an end. But what's your expectation for prices? And adding to that, how do you see it impacting global politics and the global economy going forward?
So I'm going to take the easy road out, and I'm going to say that I think we're just kind of here. I think when you look at Brent pricing, just to keep it simple, I think we actually see Brent prices hold between about 103 to 105 through the rest of the year. So I do think there's some upside momentum, given that we're currently sitting at about 99. But there are these competing factors. Obviously, there's the supply that we talked about with Russia, with the West African nations. But at the same time, there's that demand pressure. So I think you're getting the supply shortfall, but you're also going to see more and more pressure coming on the demand front, which is going to keep us kind of balanced at this pricing level until we see, I think, a bigger demand response as we go into Q1 of 2023. Now, taking that to the next level on the politics, one of the things we thought is post-COVID, there was going to be a lot of pressure, a lot of issues. And when you look at petrol pricing, the unhappiness internally, when you look at food prices, energy prices, the ability to maintain after all of these subsidies, I think there's going to be a lot of geopolitical pressure, especially as inflation just runs rampant, forcing central banks to continue to raise rates, which is just going to make things a bit worse, especially in the African continent.